I'm Genevieve and welcome to Open Markets TV. Today I'm here with Eric Gao, the Director of BMY Group, a wealth management and corporate advisory firm based in Melbourne that specialises in the local Chinese investor market, in particular the high net worth local Chinese. So Eric, Australia's largest trading partner is China,
Yes.
and their highest number of significant investment visas come from China, as well as the highest number of overseas students. Can you tell us some of the interesting statistics on those that are now living in China and speak Chinese in Australia?
Yes. Not sure if you covered the statistics we already seen, I think about last week. There are 1.2 million Chinese currently living in this country. And all of that is about 560,000 or 550,000 residents in this country already. Chinese officially is the second largest language next to English your people speak in this country now.
So you specialise in looking after investment opportunities in Australia for the local Chinese, in particular high net worth. What is it that you're seeing that they're attracted to? What sort of investment products and, what sort of industries in particular?
I think number one, because China is the largest trade partners with this country, by doing a lot of trades, it's actually creating a lot of market opportunities for investment. People may come and think, okay, this product is consuming really, really well in China. For example, milk powders, that is one example. Maybe it could be other consumer goods. So those actually attracting a lot of Chinese investment at the very beginning. Not talking about, I think, mining, resources, agriculture, which is pretty hot, 10 years ago, and same thing with the properties. But by saying that, it's more and more a trend that we start to see, sophisticated investors come to the country looking for things beyond this. They start to think about, Australia as a really good, interesting destination for tourism. So why don't we come here and invest in tourism industries? And Australia is one of the largest, destination for our Chinese education exports. So why don't we go there to invest into education? And now also people think about aged care, healthcare, and technologies, life science.
And part of your service at BMYG, you've got a capital sort of venture fund.
Yes, we do.
And that specifically invests in startups. So you raise money locally,
yes,
and overseas as well, or just locally?
Mainly locally.
Yep.
Considering if you wanted to raise funds from overseas, we're also going to think about the capital controls. We're going to think about the currency exchange rate, all those sort of things. And also don't forget, the 90% SIV come from China. Those people already here with a visa. And we have 1.2 million people living here. They have the wealth to manage. So it is already a really big market here locally from the Chinese community's perspective, where we can raise good capitals for. And the funds we run is specialized in tech, but I think it's more e-commerce and fintech. That is where we think the growth opportunity is going to be. And this is where I think in the future, next 5 to 10 years, more Chinese capital will come in and invest in.
Right, and just on the subject of those significant investment visas, or the SIVs, what are the requirements? How much does that cost?
$5 million.
Wow.
It is the most expensive visa in the world, to be honest. But I think it's worth it. I mean, apparently people think, okay, Australia is close to Asia, has a lot of opportunities between China, Australia. Australia has really nice, I think, living environment to offer. And there is no terrible jet lag in this country to China as well. So it's beautiful. And so people happy to look at, okay, we can invest $5 million for 4 years, and they are only required to live here for 160 days in total for the 4 years. So it's actually a relatively easy requirement for the visa. So that is why making it so attractive for a lot of, I think, successful entrepreneurs, where they still run business overseas, but they're happy to make investment and come here, say 40 days a year to apply for the visa.
So of that $5 million, so the visa doesn't actually cost $5 million. They've actually got to invest $5 million.
Investment of $5 million, yes.
Which is why they need someone like BMY.
Well, I think we kind of basically we have a specialties in this market. We know their culture, we know the language, we know what they're looking for, the risk profiles, etc. So we kind of lucky when this visa got announced. We have so many inquiries, and eventually we help a lot of clients to deploy their funds here.
And so I was reading, obviously there's been some foreign tax restrictions for buying property in Australia. Have you seen that affect, how have you seen that affect your client base?
I think it doesn't really affect the SIV policies, but it does affect a lot of other Chinese investors. I think SIV investors are far more sophisticated. where they understand the risk of investments. They come across with the properties, equities, venture capitals, and PE. So they are sophisticated enough to make this kind of, say meet the investment criteria, I guess. But for the property market in itself, is a little bit different. If you look at if you look at Melbourne now, we have so many apartments and townhouses and new land available, and those developers are selling. I think there was an official number, nearly 20% of the new apartments to overseas. I think China will count a big portion of that. About 17% of the new land subdivisions to overseas buyers as well. So I think China will count a portion for that as well. So we will start to see heavy tax on this market itself. And also, don't forget, we still have tightening monetary policies. So banks are hesitated to lend to overseas buyers nowadays. It actually did give a lot of pressure on this market right now. So I'm not surprised to see it's going to be a correction in our property market in the next 2 years. If RBA is going to raise interest rate again, so this will happen sooner.
Right, okay. So, and there's also been some capital controls for outflow investments from China.
That's right, as well.
Have you seen that effect?
It has been happening last, I think, six to 7 months. Initially, the central government says, look, it's going to be difficult for you to apply for, overseas. Because in China, if you want to buy things overseas, doesn't matter if it's property or securities, you're going to go to the central government, exchange your currency. You're going to apply the quota for the currency. If they simply say, look, you cannot exchange the currency now, it makes them really hard to make overseas investment. At the same time, central government start to release an announcement or statement by saying, okay, this thing has been happening a lot in the last 5 to 6 years. A lot of companies go overseas to acquire resources, land, and other things. But the investment return turns out not to be that good. So now you guys gonna go through a tougher, say application process. Then the central government will say, okay, you're free to go, or no, you can't go. So this has been happening after 6 to 7 months. This will affect, I think, foreign investment in this country, especially coming from China. Some sectors, if they heavily rely on, Chinese investment, I think they are going to suffer. One sector for sure will suffer is property.
Right.
Yeah.
Yep. So, Eric, I wanted to ask you about Chinese companies that are listing in the ASX and also the National Stock Exchange. OpenMarkets, being an online broker, we're also connected to the National Stock Exchange. We've seen a large number of Chinese companies list and shareholders obviously in China supporting that listing. Yes. What's the interest in the listing on the stock exchanges?
You're going to look at the Chinese stock market where I think it's not like here. As long as you pass a compliance test, you can get listed on the stock exchange. In China, you actually, the Chinese central authority has, of course, certain requirements, but also you're gonna wait in the queue before you can. They only have a certain quota of numbers the company can list on the stock exchange. It doesn't matter if you tick the boxes or not. If someone applies you a month ago before you're still gonna have to wait for another couple of months before you can get listed. So there are thousands of companies that are in the queue. And you know what the equity market is like, right? Some companies, if they raise the capital, they can run faster. They can become the leader in certain areas. But what if you wait in the queue for 2 or 3 years? That is what's happening. There are companies waiting in the queue for 2 or 3 years before they can get listed. So they will think about, okay, if that's the case, why don't we look at other countries or other stock exchanges helping us to raise the capital to help the business to grow? And also, don't forget China, and again, China, Australia has these close trade and investment relationships. If that is a company, a Chinese company, where they can take some boxes for ASX listed requirements, but also they have a business here in Australia where they can give the Australian investors the opportunities to ride on the Chinese economic growth, but also by helping the Australian business or Australian products and services export that back to this massive market. I think that's a win-win-win.
Yeah, right. Because at OpenMarkets, the demographics of Chinese opening up the online share trading tends to be a bit younger. What have you seen in the appetite for from an investments point of view on the Australian stock markets?
Well, number one, thanks to OpenMarkets, I have to say that we have, as a Chinese advisor, we have been waiting for a simplified stock trading platforms in this country for 7 years. Can you believe that? Right? We have been speaking to a lot of big names. They said, yeah, we're going to do it, but they never deliver. So thanks to you guys. And back to the question. Yeah, back to the questions. Yes, I think I mean well, stock trading is a popular thing in China. It doesn't matter that it's elder generations or younger generations. I think they all wanted to do this, but trading overseas stocks will be different. I think it's more a younger generation people thing. So they want to make sure they look like they're different and they're cool. They want to explore the new world. And don't forget, they access different information on internet compared to the elder generations. So I'm not surprised to see more and more younger traders wanted to test the overseas markets.
Right. Great. Thank you so much for talking to us
pleasure.
today. Eric, such a pleasure. And for anyone who wants to find out more information about your services, it's BMYG.com.au.
Yeah. For anyone wanting to use the world-class trading platforms in this country to trade stocks, and that is OpenMarkets.
Thank you. .com.au. Thanks, Eric.
Right.
Thank you.
Yeah, thanks a lot.
Thank you.
Thank you.